What's going on, everybody? Welcome back to my YouTube channel. So on today's session, we're going to be going over a complete beginner's guide to a simple break and retest strategy. Now, a lot of you have been requesting this, so I thought I'll get this done. Now, just before we start, just a disclaimer, what I'm about to teach you now is of my own opinion. This is not financial advice. So please remember that. So I've been trading for about 7 years now, and I've tried absolutely everything that doesn't include an indicator. So price action for me was really always the route to go. Now, I found over the years, keeping trading simple is clearly the simplest way to stay on top, to be systematic and in control of each action that is taken. So what I'm about to teach you today is purely based on price action trading alone, following the trend and understanding the market's behavior. So let's roll the intro and get into this. So the first thing that we need to understand when we're trading this strategy in terms of a break and retest strategy is that there's 3 phases to any market structure. We have an uptrend, we have a downtrend, and we have a sideways moving market. The way the market illustrates these phases come in all different variations. So it's very important for you to get familiar with the different patterns that you're about to experience as part of this strategy. So now what we're going to be identifying on an uptrend is how the market pushes to the upside, pulls back to the downside, continues to push to the upside, and pulls back to the downside. Now, in theory, we would all love for the markets to look like this every single time, but we know it's not going to happen every single time. Sometimes the market's going to push to the upside, it's going to pull back, it's going to create structure that doesn't continue up, then it's going to pull back, then it's going to go up, then it's going to pull back, and then it's going to go up, and then it's going to pull back, etc., etc. So this is something that you need to look out for. You need to understand that these are 2 different patterns. With this break and retest strategy, you're going to be focusing on clean price action. The next thing that you're going to be focusing on is monitoring how price breaks above a previous structure high. So in this instance, if the market is pushing to the upside, you're going to be identifying this as your structural high. Now, you don't want to buy the market until price has illustrated a clear trend. And that illustration will be represented by price breaking above structure, retesting structure, and then continuing to the upside. So what we're going to be focusing on today is how we can identify taking trades in and around these break and retest levels. You're going to be looking for clean structure that clearly illustrates a trend in market to the downside. You're going to be looking for price to break the previous structural low. And then you're going to be watching how price pulls back to these key levels for a retest and then look for these continuations. Again, the patterns to take these trades will be illustrated later on in the video. So this is what you're going to be looking for as part of this break and retest strategy. It's really simple. Now, if you don't know this already, the market creates structure with higher highs and higher lows and lower highs. Now, I'm not going to illustrate this in this video because it's something that most of you will already know. But if you don't know the terminology behind this trading strategy, then just understand the simplicity of it, which is simply waiting for the market in a downtrend to take out its lows and come back to this level for a retest before a continuation, and vice versa for buying opportunities. Now, I all want you to be aware of something. The only markets that you're going to trade is if the market is pushing to the upside or the market is pushing to the downside. If the market is moving sideways and you do not identify a clear directional bias, then guess what you're going to do? You're not going to trade in this market. The habit of a trader is to create a story that doesn't exist, and that's what leads to very bad trading opportunities, losing a lot of money, taking trades you shouldn't be taking, etc., etc. So any market structure that is moving sideways, you are not taking any trades. Only if the market is clearly identifying an uptrend or a downtrend is when you will go into the markets. The next thing you need to understand is the phases of the market. So what we're going to be focusing on when taking our trades is identifying an exhaustion phase, then the patterns that we require to take that trade, and then take a trade in line with a trend to the upside or downside. And this phase is what we call a continuation phase. So when the market is pushing to the upside, you will see the market pushing up like this. This is what we call a continuation. When the market is pulling to the downside, this is what we call an exhaustion. You're going to be focused on taking trades in this area here, when the market is clearly identifying that the exhaustion is over. Once the exhaustion has illustrated the patterns you will learn today, then you will take your trades in line with the direction of the trend as part of the continuation. This also applies to a downtrend. When the market is pushing to the downside, this is what we call a continuation. When the market is exhausting, this is what we call an exhaustion phase. This is where you're going to be looking for your trading opportunities in line with the direction of the trend. Once you learn the patterns that you will learn today, you will take your trades then as part of a continuation back to the downside. So in its simplest form, you will be focusing all your attention on identifying the exhaustion phase so that you can continue trading with the trend when it starts to continue in the push phase, or as we called it, the continuation phase. So let's take a look at two patterns that you're going to be identifying as part of this break and retest strategy. So just a recap, you're trading with the trend to the downside or upside. You're looking for the market structure to pull back to create an exhaustion phase, and then you're looking to take a trade once the market illustrates a retest of previous structure. Once the market has illustrated this exhaustion phase, you are looking to take this trade as part of a retest continuation push phase so that you can continue with the trend to the downside. If the market is pushing to the upside, you are waiting for the market to identify a break of the previous structure, a retest of that structure in an exhaustion phase, identifying the patterns you will learn today, and then taking that trade in line with the direction of the market as a push phase. If the market structure is moving sideways and not highlighting or illustrating any clear directional bias to the downside or upside, you are avoiding taking trades in this direction. So let's take a look at pattern number one. So here we have pattern number one. Now I want you to identify what is happening in and around this area. You can clearly see that we have a strong push to the downside. Now this is coming off of the back of an uptrend. So this means that the market is pushing to the upside. With this market pushing back to the downside, we call this an exhaustion phase. So this just simply means that the market is resting in an uptrend, pulling back for whatever reason. Don't go into too much details about it, just focus on the patterns. And what you're looking for the market to do is show strong bearish candles to the downside in line with the trend that should be up. And then what you're looking for is for the market to create indecision. This indecision is clearly highlighting that the market is depleting in this bearish pressure and more likely to continue in the overall trend, which is the upside. Once you identify this pattern, you are then looking for the market to create this candle here, which is a strong push to the upside with a wick rejection. This clearly highlights that the bears tried to push the market down, they failed, and then the bulls came in with a strong push to the upside, closing strong, bullish, in line with the trend that is up. This is the first pattern. The second pattern that you're going to look for in an uptrend is the market exhausting. So this is coming off the back of an uptrend. You can see the market is pulling back or exhausting. And what you're going to be looking for is for the market to create a cluster of wick rejections. This is clearly indicating that the bears pushing this market to the downside are depleting, and there is a lot of bullish pressure stepping back into the market with the overall trend to the upside. So this is your second pattern. So this is for a sell bias structure, so a trend to the downside. This is the market pushing to the downside, and this is the exhaustion phase. Again, similar to what you just saw in an uptrend, you're now looking for these similar patterns in a downtrend. You're looking for strong bullish candles to the upside against the trend, and then you're looking for indecision candles to show a depletion in this bullish pressure. This depletion is in line with the bearish structure, and then you're looking for a strong wick and a candle to the downside. The next pattern we'll take a look at for a downtrend is the market pushing strong to the downside. This is in fact the exhaustion phase, and what you're looking at here now is multiple wick rejections indicating strong bullish pressure to the upside, but with the overall trend, this bearish pressure representing that the bears are taking back control of this market. So they're the four patterns. In fact, they're two patterns, two for a buy bias market and two for a sell bias market. Let's take a look at two live examples in the market. So the first example that we're going to look at is pound USD on the 1 hour time frame. So if we look at this market structure, we can clearly see that the structure of this market is to the upside. We can clearly see that the market is creating higher highs, higher lows, higher highs, higher lows, and higher highs. So this is a clear indication of an uptrend. Now what we're looking for the market to do, remember, is break the previous high, and then we're looking for the market to come back to this level to show strong signs of bearish pressure into this level, and then we're looking for the indecision and then the bullish candle to represent a continuation of this trend. So let's continue to see what happens. We can see the market is continuing to push up. We're not worried about this just yet. We want the market to come into this key level extremely strong. We want to see the indecision at this level as we're starting to see now. So the market has come back to this level. We see indecision, and now what we want to see is a strong candle to the upside. Now I just want to make this a point. You might be saying, well, why did you not take the trade here when there was indecision and there was a strong bullish candle to the upside? Well, this is a very important rule. Do not take a trade when you first identify this pattern. You want the market to create a level, and then you want the market to come back to this level to illustrate that the market is holding. So for those that have been trading for a while, you might see this as a double bottom. Or for those that have not been trading for a while, you may not understand what this is. But from a behavioral perspective, this is simply illustrating that the market is respecting and creating a new level. And when the market comes back, that level is being respected. So you're creating a level of confirmation, or evidence, should I say, and then you're getting a level of confirmation. And this is when you want to trade, when you have confirmation. So now we have the pattern, prices come back, we see the indecision, and we see the strong candle to the upside in line with the trend and at a retest level in the market. This is where you want to take the trade. Now, I'm not going to go into too much details about entries and exits and how to take a trade, etc., etc. It's very important that you go away with the strategy that you're using or the risk management plan that you're about to implement, and you back test this and you forward test this until you get the results that you're looking for. So this is trade number one. I always go for a 1-to-3 risk reward ratio trade, and let's play this out and see what the outcome is. So there we have it. Trade number one has hit take profit. So please remember, this pattern is very, very powerful. We want to take the trade in line with the trend. We want to see price break above a previous structural high. We then want to see price come back to a level or create a new level. And then we want to see a double bottom of that level. Look for the indecision after strong bearish pressure into this level. Look for the indecision and then look for the bullish pressure to the upside in line with the trend and take the trade. Let's take a look at our second pattern. So for our second pattern, we can clearly see here on Euro USD on the hourly time frame that the structure of this market is to the downside. We can see that the market is pushing exhausting, pushing, and exhausting. Now don't think about this too hard, but just look at the structure. Does this look buy bias to you, or does this look sell bias? Once the market has illustrated that it's either trending up or down in this instance, identify where the market is creating a level. Now remember, we're not taking the trade immediately. What we're looking for is for the market to come back to this level to highlight the pattern that we're looking for. So what we want to do is just wait patiently for the market to come back. Now, as you can clearly see here, we're looking for multiple wick rejections. So this is evidence that the market has created a level in line with the direction of the market, which is down. Here we see our first wick rejection. Now, you're not looking for a perfect pin bar, or you're not looking for a kangaroo tail. You're not looking for anything that's perfect. You're looking to take trades with confluence. So our confluence is a downtrend, a level created, our first wick rejection, and our second wick rejection. Once you have this evidence, now it is time to take this trade. Again, I'm not going to go into too much details about how you take this trade. It's down to you to go away and back test this or forward test this to make sure that you're fully understanding and grasping what you're being taught today. But the simple concept of trading with the trend, looking for the break of structure, as you see highlighted here, the break of structure, as you see highlighted here, price coming back as a retest, and then the wick rejections as evidence of a level being created, and then confirmation of price respecting that level. Let's play this out and see what happens. And as you can see on example number 2, we hit take profit. So I really hope you found this useful. Now, I just want to make this very clear. When you go away and backtest this, you will find that not every illustration that you've seen today, or the 2 illustrations you've seen today, will be as perfect every single time. Now, I'm not claiming that these are perfect, but they're good examples. And the reason why they're good examples is because I cherry picked these examples. Now you might say, well, yeah, it's easier for you to cherry pick and do the replay mode rocks. But no, let me tell you something. What the majority of traders want to do is they want to take every break and retest. What great traders do, what traders that are consistent and profitable do, is they wait patiently for the best setups. So yes, even if these were cherry picked, this is what you need to be doing in the live markets. You need to be waiting patiently for the market to create clear structure. You're waiting for the market to break structure. You're waiting for market to create a level, and then you're looking for the market to confirm that that level is strong. You are looking for strong bullish or bearish candles into structure, and then looking for a candle to go in the direction that the trend is already in. Or you are looking for multiple wick rejections. So key points: be patient, always wait for a retest. Focus on these 2 patterns only, use proper risk management, and backtest a minimum of 100 trades per pattern. I hope you enjoyed this, and as I always say, please smash that like button, subscribe, and until next time, take care.